There's this incredible financial tool out there that's quietly changing the whole game for global trade. It's basically a lifeline for the smallest businesses, the ones trying to make it on the world stage. We're talking about something called supply chain finance.
So, to really get why this is such a big deal, let's zoom in on one person. Just imagine a textile artisan in Nairobi. She's incredibly talented, and she's just landed a huge, life-changing order from a big retailer in Europe. I mean, this is the dream, right? But that dream can turn into a nightmare really fast when she's faced with one simple, terrifying question. It's that classic cash flow trap that can just crush a business before it even gets off the ground.
And here's the thing. Her story isn't some rare exception. No way. It's the day-to-day reality for most businesses on the entire planet. I mean, get this. The World Bank says that over 90% of all businesses are what we call small and medium-sized enterprises, or SMEs. They're literally the engine of the global economy.
And that cash flow trap we were just talking about, well, it's a massive wall. For nearly 40% of these small businesses in developing countries, getting access to money is the #1 thing holding them back. It's this huge, systemic issue that just chokes off growth and new ideas.
So you can see why for these entrepreneurs, trying to go global isn't just a business move, it's a massive, high-stakes gamble. They're basically walking into a financial minefield, one that bigger companies are just way better equipped to navigate.
Okay, so let's really break down what that gamble looks like. First, you've got these crippling cash flow gaps. I mean, you're waiting months and months to get paid. Then, you've got to worry about currencies bouncing all over the place, or political issues that can just wipe out your profit overnight. On top of that, how do you build trust with a partner who's halfway around the world? And the final nail in the coffin? Traditional banks often look at these small businesses and just say, nope, too risky. It's a totally vicious cycle.
But what if there was a way to break that cycle? Well, this is exactly where supply chain finance, or SCF, enters the picture. And it's not alone, not in the way you're thinking. It's a much more elegant solution built specifically for this complicated dance of global trade.
All right, so what is this thing really? At its heart, SCF uses technology to fix a very simple, very old problem. The supplier needs to get paid now, but the buyer wants to pay later. SCF just steps right into that gap. It builds a financial bridge, you could say, that keeps everything flowing. And this is the magic of it, why it's so powerful. It's a genuine win-win. Think about it. The small supplier gets their money, like right away. That frees them up to pay their people, buy more materials, and grow. At the same time, the big buyer gets to hang on to their cash longer, which is great for their books. Everybody comes out ahead.
Okay, so how does this actually work in practice? It's really just a simple 3-step dance. Step 1, the supplier delivers the goods and the buyer says, yep, this invoice is good to go. Step 2, a financier, and this could be a big bank or a nimble new tech company, jumps in and pays the supplier, often within days. Then, step 3, the buyer just pays the financier back on the original due date, maybe 90 days down the line. It's simple, it's clean, and it's so effective.
All right, so that's the theory. But what does this actually look like in the real world? Let's take a look at how SCF can flip the script, turning what was a huge risk into a massive reward.
I mean, this chart really says it all, doesn't it? On one side, you've got the old way, that long, agonizing wait for payment that just bleeds a business dry. But then you look at the other side, with SCF, and boom, an instant shot of working capital. And we're not just talking about numbers on a screen. That is the actual cash a business needs to stay alive and thrive.
And what's so crucial to understand is that SCF does way more than just provide cash. It fundamentally de-risks the whole transaction. You're less dependent on those hard-to-get bank loans. The risk of a buyer just not paying goes way down. And because it's all built on technology, it creates this layer of trust and transparency between people who might have never even met. Let's put this head-to-head with the traditional loan, because the difference is just night and day. A bank loan is all about your credit history, your collateral. But with SCF, the whole thing hinges on the creditworthiness of the big, established buyer. That simple switch makes the whole process faster, easier, and way more accessible for the little guy. And believe me, this has a real human impact. Let me tell you about Priya. She runs a family spice export business in India. For years, she was just constantly teetering on the edge of collapse. Why? Because late payments from her buyers meant she couldn't pay her own farmers up front. But then she joined an SCF program, and everything changed. Suddenly, she was getting paid early. She could pay her farmers on time, every time. And she could grow her business without having to take on all this crushing debt. I mean, she said it herself. It saved her livelihood. Today, her company is thriving and exporting to over 10 countries.
In Priya's story, it's becoming more and more common. And the big reason for that is one word: Technology. Tech is what's taking SCF from this niche thing that only giant companies could use and turning it into a tool that's available to pretty much everyone.
Yeah, technology is absolutely the secret sauce here. It's the engine that lets all these complicated transactions between all these different people happen smoothly, securely, and on a scale we just couldn't have imagined even 10 years ago. It really is leveling the playing field.
So what kind of tech are we talking about? Well, for starters, you have these amazing digital platforms that connect everybody: the buyer, the seller, the financier. Then you've got AI coming in to automate things like checking invoices and figuring out risk on the fly. And then there's tech like blockchain, which creates these secure, unchangeable records of everything, which really slashes the risk of fraud.
So, what's the next frontier? It's really exciting, actually. It's all about linking finance to sustainability. We're starting to see programs pop up that offer better deals, better financing terms to suppliers who are doing the right thing, meeting high environmental and social standards. It's a really smart way to encourage positive change through the whole system.
So, let's circle all the way back to the beginning. Remember our artisan in Nairobi? The one with that huge order filled with a mix of excitement and total panic? Well, thanks to a program just like the ones we've been talking about, she was able to bridge that cash flow gap. She paid her people, she delivered that massive order, and now her business is thriving in ways she never thought possible.
And all of this really leads us to one big final question. We've seen how supply chain finance can empower the little guy, how it can build trust, and how it can make global trade stronger. So, if we can get the flow of money right, could smarter finance like this actually be the key to building a global economy that's fairer and more equitable for everyone?